Hey, it's your boy Rodney. Rodney Woods with Penn Global News. Antonio Davis, my host.
Man.
That's my segue. And like, you remember the Fat Albert show? Like, hey.
Hey.
So man, good day, Antonio. Good day, brother.
Hey,
October 2nd, man. 2024. Man, where has the year gone?
man, flew by, man. But we here doing our thing. So we just
Yeah,
gotta
we here.
be grateful. Praise the man upstairs. You know what I mean?
Absolutely, man. We praise him every day. Every day we wake up, it's a great day, right?
Sure,
Absolutely.
sure.
Absolutely.
So, man, we're here today, October 2nd, PN Global News. Myself, Rodney Woods, my host, Antonio Davis. We're here talking about the pathways to funding access to capital. I mean, there's so much going on in society today in talking about capital, gaining access to capital, even just trying to understand how the hell do I get to capital, right?
Yes, indeed. Yes, indeed. And before we go any further, I always want to make sure that we give a shout out to our incredible team, Sonia, obviously, who is always behind the scenes, making sure we look good, it sound good, and all that good.
Yeah.
Uh,
Bear White's
T-Mac,
out.
T-Mac, our guy, who has been there since day one. We really appreciate him. And then the others, Dean and Damien and the rest of the crew, we really appreciate them. We can't do nothing by ourselves. This is definitely a team effort. Um, and then today, we got a great. You guys better listen up because we talk
Yep.
about access to capital. Here's a man with over 30 years of extensive experience in small business finance, a seasoned banker based in Texas. He has held key financial positions with consumer and commercial banking. Mr. Todd Adams is passionate about empowering underbanked small businesses and is dedicated to enhancing access to funding options. He will share his insight and innovative leading solutions prior to seeking funding and the pathways, like Rodney said, to financial empowerment to underserved entrepreneurs. Mr. Adams, welcome. Welcome to our show. Welcome to our
Yeah.
platform.
Welcome,
Thank
Todd.
you. Thank you so much, sir. I appreciate
We really appreciate you, man.
Yeah. So
appreciate
hey,
that.
D, I've had the privilege of hearing them speak before and really telling the real truth on how
Man,
you gain and how you really gain access to capital. Because some people don't want to tell the truth on
man.
the real reason why you cannot get capital.
Yeah,
Todd,
It
thank
is
you,
what
I'm
it
gonna
is.
tell the truth, man. That's all I know. All I know is the truth. So I appreciate that. Appreciate that introduction, sir. I wish they say this is recorded, but I'm gonna show my friends who I was introduced by. So I'm moving on up in the world.
Man,
It's all
Yes.
good, man. That's
honored.
what we're here for. That's what
Well,
we're
that's good, and I'm not sure if the audience, if they're able to chime in or if they're able to ask questions or what have you. But I'd like to have some, that interaction between those who are out there and myself, and I'll talk a little bit about uh, you know what bankers look for, what
Yeah.
community lenders look for, and just things that you need to have at your disposal at all times if you're
Yeah.
a serious business owner. So we'll
Yeah,
talk
and
about
I
those
think
things.
most of us, Todd, all of us feel like we're very serious, right? We feel like we're serious. We're serious business owners. We get up every day, man. We try to go get it. We live, we sleep, we eat this stuff every single
Good,
day.
good.
So I want you not to hold back
I'm
when
not
you're
gonna hold
talking
back,
about.
man. I'm gonna give
No,
you
no hold back. Let's do this, man. Let's
Man.
do this.
Well, Todd, talk about some of the specific challenges that are faced. The underbanked small businesses faced. I'm assuming, if they're trying to get lack of credit or maybe the interest rates or anything like that. Why don't you just start off just by talking about some of the challenges that you've seen small businesses run into?
I would say some of the challenges that a lot of the small businesses are facing right now is their cash flow. Their cash flow holds them back a lot of times. Because banks and other financial institutions really do want to lend the money. That's the only way they can make money, is to lend money. They lend money, they charge you an interest rate, and that interest rate is what it's where they're gonna make their profits from. They expect for you to pay it back, and they expect for you to pay it back at this particular interest rate. And you want to try to be able to get the right rate as well, because there are some lenders out there that I just look at them and think they're predatory. They will take you for a ride and take everything you have. So you want to be careful when it comes to that as well. But some of the big challenges.
Not to cut you off, what can you talk about that interest rate? What is like? And I know that interest rate can go, it can span a long ways.
Mm-hmm.
Can you just give us an idea of, like you said, a predatory lender will have what kind of interest on, and it really depends on the type of money you're getting, right?
Yeah,
it really does depend on the type. Your banks are regulated by the federal government, especially the National Association banks, and then you have other institutions out there like community development financial institutions. They're regulated as well, and most people know them as a CDFI.
right.
You're going to find banks. Their rates are going to be prime plus, and usually whatever they can borrow at is going to be prime. They can go to the Federal Reserve and they borrow at, I think like right now, prime is 8. It just went down, so it's 8, and they're going to charge. They got to get their piece out of that as well, so they may charge a rate a point or two. So you're looking at, you may go look for a loan and you're going to pay 10%.
Okay.
The bank is making 2% off of that loan that they're giving you. So that's their spread or their margin. And then you look at a CDFI, which is government regulated as well. And the banks work hand in hand with those CDFIs. And those CDFIs take on a little bit more risk. So they're going to say, hey, we're not going to be predatory, but we are going to take a little bit more risk. So we may go 3 points. 3.5 points. It's not going to be something that just extreme. So you're looking at 8 plus 3, 8 plus 4. So you're looking at 11 to 12%, and that's just the environment that we're in right now. And I've been in banking for a very, very long time. I was in banking when we had individuals that would come into the bank or come into the savings and loan where I worked, and that they would give us the keys to their house. Here are the keys. We can't afford it anymore. The rates were at 17 and 18%.
Right.
House. You're talking 18% on a house. So naturally, your payments are going to be skyrocketed. And I hear people talk about, well, housing is unaffordable. It's not affordable anymore. The rates are so high. Man, these rates are beautiful. These rates, 7 to 8% for a house, is high now because we went for 20 something years with this 2-3% interest rate. So we thought it was going to always be like that.
Right.
And it's not.
Right.
I can remember at 18%, and when they came down to 6 and 7%, people thought this is fantastic. I can get a house at 6%, 7%, 8%. Okay, we're good. I know the rates are going to come back down eventually. Are going to drop eventually, so I can probably refinance it at 4 or 5%. Those are good rates. What has happened? The houses have increased in price. So that's 7 to 8%, and your average house out there is $300,000, $400,000. That's the average. That's a starter home. And back then, those starter homes were you can get your starter home. But now those starter homes are $400,000 or $500,000. So that's
you're in Texas.
Right.
You're out here in Cali. You talking 600, 700,000.
Exactly. That's a starter home in Cali is $700,000, $800,000. I got family
out
there.
Tell AD he need to get his A up out of there and come on to Texas.
Well, if he came to Dallas, he could own a block or two.
Yeah, right. With the buddies. So I want to back up though, Todd. We don't
Okay.
we don't want to really do the rapid fire with you like that, but a lot of the people in the communities, right, and the business owners and everything else, still does not. I want to repeat this. Still does not understand CDFIs, right? So you got to kind of expound on CDFIs, but a lot of people really don't know what is a CDFI and why is it so important in our community, knowing that they got to get this money on the ground. They really want to
Yeah.
get it on the ground, right? And for particular reasons. I'm not going to steal your thunder, but you go ahead and tell them why.
Oh yeah, absolutely, man. CDFIs, again, like I said, they're community development financial institutions that were put in place for those underserved, underbanked type businesses that were out there. Banks were being very, very picky. Banks were being very, very strict in their lending guidelines. And so when you start a startup business, or you've been in business for a couple of years, and your cash flow isn't quite what you need it to be, but you're surviving. The banks can't help you right now. They tell you, hey, get out there, build your business up, get your cash flow to a certain level, where you have a certain ratio on your debt coverage ratio or your global coverage ratio. They want you to get to a certain point. They can't really do anything for you. And that's where a lot of small business owners sort of got frustrated, because there was no place to go. The government came in and said, let's start this organization, the CDFIs, where they can help these underserved businesses. And banks started working with CDFIs and said, hey, I got a very good customer. He's one of my great customers. They just ain't quite there yet. Can you help them? And that's where the CDFIs come in, and they can help those types of businesses get the funding that they need at a reasonable rate. And that's not something that's 29, 30 something percent interest rate. You're talking a reasonable rate. And at this point in time, that rate is probably hovering around 11, 12, 13%, as opposed to 30%. Yeah. You get a loan at 30%, man, you're never going to pay that thing off.
but what does a business though that's really talking to a CDFI, what do they need to have? Like when they come in there talking to a CDFI and trying to actually access the capital?
Well, I'll tell you what, CDFIs are basically almost like bank. We don't take deposits. They don't take deposits or anything like that. All they do is loans. They just do business loans. So we're going to ask that business owner to come in with the same documents that you would go into the bank with. And everybody should have those documents. That's why I said earlier, Rodney.
But spell them documents out, man. We want them to understand what documents they have to have.
Yeah,
right.
This is what we're gonna ask for. We're gonna ask for your bank statements, especially the last 3 months worth of bank statements, so we can see how your business has been operating. We're gonna ask for maybe the last 2 to 3 years tax returns, personal and business, so that the last 2 or 3 years tax returns on the personal and business is going to give us a really good indicator of how what you write off, how you file your taxes, things of that nature. We want to look at your personal financial statement. A lot of times people take so much money out of their business because they are probably the only owner. It's an LLC, and I am the LLC, so I'm gonna pay myself whatever I want. And they take so much out of that business to where it doesn't. The business is not actually cash flowing the way it needs to. So you got to be careful on what you take out of your business and how you spend your funds and where those funds are going. So you're looking at tax returns, bank statements, personal financial statements. Sometimes we may want to see your documents on how your business is set up. Are you a sole proprietor? Are you a LLC? Are you incorporated? Just how is the business set up? Because we don't want to have funds when you are the only owner, even if you're incorporated. I'm the CEO of this corporation. My wife is the chief financial officer. My son is the treasurer. So, or whatever the case may be. It's still in the family. It's all in the family. So we want to make sure those funds are not being commingled. So we got tax returns for the business, tax returns for personal. We got to have those tax returns on both sides just to see how you're operating and where the funds are going with that in that business. So again, how the business is structured, how it's set up, tax returns, personal and business, bank statements, personal and business, and maybe your balance sheet, maybe your income statement, maybe your cash flow statement as well. Where's the money going every single month? You brought in this amount. Where did it go? We want to see that on the income statement as well. So those are some very, very important documents that we try and really just hammer it in to the client, to the business owner. The bank's got to have these. They got to be able to look at your business and see, is this a risk that we want to take with our investors' money? Because banks are controlled by investors, controlled by individuals who invest in, who buy stock in that bank, or who give money to those CDFIs. Most CDFIs are a nonprofit organization. So they get donations. They get funds from the banks. They get funds from the federal government, or they get individual investors who want to invest in a CDFI, and they got to make sure that they're using those investments wisely and giving those funds to individuals that show they have a propensity to repay as agreed. So those are some very important things that we look at, those types of documents.
But having all that together, though, Todd, like that can kind of expedite, the process.
Man.
Right. So let's talk about that, right?
Oh,
because it's on the business owner.
It is. It's clearly,
right. Yeah.
It's clearly on the business owner. And what has happened now is the federal government has put into place, especially if you come in for an SBA loan or something of that nature, you have only so many days to get all the documents in place and get that loan closed.
Hey man, you might need to repeat that. I don't think we heard you, brother.
I'm telling you. I'll tell you this: if you come to me and you piecemeal me your documents, after 10 days, that loan is no longer valid. I mean, that request is no longer valid. You have to start all over again. So I always tell the client that if you're coming in, you want to borrow $100,000, don't fill this application out until you have all the documents prepared and ready to go. I got to get with my accountant. My accountant said he can't get it to me until next week. We're 7 days in. You only have 3 days to give me the rest of those documents. And if they don't happen in 3 days, that loan is gone. That loan is we're starting all over. So have all of your documents prepared and ready to go. Get with your accountant if you have to get with your accountant. And even if you have a great accountant, everything that accountant has, you should have. You should have the same documents that he has. He should be giving you your statements and your balance sheets and income statements to you every month. And don't just let him keep them. It's great that he can retrieve those documents for you, but you should have those documents yourself where you can reach and get them also. That really, really lets a banker know or a lender know that you're serious. When I tell you when I get a client and I say, are you ready? Oh yeah, I got everything. I'm ready to go. Just I got all my documents right here. And they download everything that we're looking for. I'm like, whoa, this is what's happening. I like this right here. Right. This client is ready. He's ready to go. Right. And I'm gonna do everything I can to push that loan through as quick as I possibly can, because he has come to the table ready. He has come to the table with all his things, all his ducks in a row, I's dotted, T's crossed. He's ready. We don't get that too often. So that's
especially
when
from our people.
yeah, the banks get
AD,
frustrated.
I didn't hear you, AD. What you saying?
No, just saying, especially from our people. And listen, I went through that process a couple times, and I had to learn, like, hey, these are the things I have to keep on file. Like, I got to keep them ready. If just even in an evaluation of your business, if
Yeah,
someone comes along to tell you if you're running your business well or not, if you're going through your financials on a monthly basis, the changes you need to make. Like you said, my money's going out. Can I save money doing that? Like all those different things you need to know to run your business anyway. So
yeah.
it's good to walk through somebody who can teach you about those numbers and show you those numbers. And then when you get to this place, it's just something you pull up like, oh, I got those. Here you go.
Yeah,
You know what I'm
and man,
saying?
that makes it so much easier, and the process so much faster. When a client is prepared and ready, that banker or that lender, he has an incentive at that point to really make sure this thing happens because he gets paid on on the loans that he makes. You get a
Right.
little salary here, but when
Right.
you start making those loans and you start getting commissions and bonuses, that's pretty nice. And that lender wants to make that loan because that's going to help his pocket as well. So when the client comes in and they're prepared, they're ready, they got the documents in hand. We don't have to wait till that he gets with his accountant or gets with his attorney or that they're locked up in my safe at the bank in the safety deposit box. I got to go to the bank next week, or it's going to take me 2 days to get over there. That's time. That's time. That clock is ticking. And the government has said we have a time frame. We got to close these loans within 30 days. And what happens when I get everything I need within that 10 days, it goes to underwriting. Now, underwriting does all of the processing and review and make sure everything is correct and right, and the risk that we're taking is a viable risk. They do all of that, and it may take them the next 10 to 15 days to get all that worked out. And now we're sitting at that 25-day period, but we're right there. We're getting ready to go to closing at this point because you've given me all the documents that I needed. Now the onus and the responsibility is on underwriting. If underwriting shouldn't have to come and ask me for anything else. I've already given them everything. So now that responsibility is on the underwriters, and the client should just sit back, relax, and wait, and we should be closing within 30 days. And that's what we want to do.
So, question, right? So
Yes,
now, today, obviously technology has evolved, right? And we have all these businesses, and you have all these banks, and you have CDFIs, you got all type of lenders out here now. Now they're telling you, hey, within 24 hours or 48 hours, I can let you know if you're getting funded. Why is that?
It depends on the amount. Some loans, some things, lenders, banks, CDFIs, they look at and they say, okay, we pulled his credit. We got a snapshot of his credit right now. He has a great credit score, and we're looking at how he has paid all of his other creditors, and it looks like he's paid them very, very well because his score is over here. It's the 720s, 750, or whatever the case may be. And at that point, they know we can give him $50,000. We can give him $100,000. We can close this deal fairly quickly.
Because we've seen it. We have a few testimonial clients that
good
gone into the bank, right? And I won't name banks because it's many, but have gone to the bank, good credit score, everything's pretty buttoned up. They've gotten 100 grand, 125 grand, stuff like that. So we're got to help educate more and more businesses on how that works, right?
Yeah.
But now I'm sorry.
No, absolutely, go ahead.
Yeah. So we know that the credit score is definitely key for one on the bank side and CDFI. But now here's another thing that we discovered with people with good credit. with the business not having recurring revenues. Like I'm doing 25,000 this month, but next month I did 5,000. I'm getting declined on a loan. Why is that?
It's the inconsistency of the business.
Correct.
Why did you have such a great month last month, but this month is not that great? And that's why we ask for 3 months. That's why we ask for 3 months bank statements, so we can see, is it consistent?
Right. And this is not to you, Todd. This is just for the public to understand the real reason why you get capital, why you don't get capital, right? So yes, Mr. Adams, yes, I had 5,000 last month. I had 25 before that. But the reason being, sir, why I'm not getting that money, because the corporations are not paying me for 90 to 120 days.
And we look at your aging of your accounts receivables as well. How are your accounts receivable aging? Are they aging every 30 days you're getting paid, or are you every 45 days you're getting paid, or is it every 60 days that you're getting paid?
So Todd, in this economy today, and this entrepreneur society economy, people are getting paid 60, 90, 120 days.
I work with a lot of contractors, and God, they're getting beat up.
Right.
They're getting beat up.
This ain't picking on you, Todd. I'm just trying to get some answers.
No, man. It makes you, as a small business, it makes you feel like they're trying to force you out. You know what I'm saying? It's like I came in as, and I'm just speaking in general. You come in as a small minority business.
Right.
You do great work with them. Everything going well. Then all of a sudden there's a little bitty bump on the road. And now you don't get paid for 60 days. Yeah. In some instances, that can put you out of business, bro.
And you're absolutely right.
You know
you're absolutely right.
And then Todd, let me and I want to ask this question. We can pick up on it. So you said there's traditional loans with banks, right? Then you said there's CDFI, and then you talked about the interest rates there. What's that next level of lending that comes after CDFI from your perspective?
Well, and I was going to definitely get to that later. I didn't know when, but
no, go ahead.
I'm glad you.
I'm just curious. I'm scarred over here, man. I've been through some things. I'm just trying to understand the situation. But don't.
You're right on track, man.
You're
right on track. And I tell, and when I do types of access to capital presentations, I tell people all the time. Okay, bank is usually what everyone thinks about it. The bank. I need to go to the bank. I need to go to my banker. And that is a great place to go. The banks are definitely going to take care of you because they want all your business. They want your house, your car. They want you to have their credit card. They want to take all of your deposits, and they want to give you whatever you need on the lending side. But sometimes they can't do it for you because that person is not ready right now. So then you go to the CDFIs or the credit unions. There's credit unions are part of that program as well. Credit unions, banks, CDFIs. Then you start looking at other avenues that are out there. Crowdfunding, angel investors, VCs, venture capitalists. And that depends on how much you're looking for, because when you start getting into those angel investors and those venture capitalists, those are the individuals that may need $1 million plus or what have you. And I have clients, I have contractors that need $1 million. They got these big contracts out here at DFW airport. They're doing over $10 billion worth of construction out at the airport right now. And we have contractors out there that need $1 million to kind of really do what they have to do. And the good thing about the airport is the airport will start paying you within 30 to 45 days. Once you get that first payment, then it's going to start coming like clockwork. So it's easy to give a contractor that's out at the airport $1 million, knowing that his contract is for $8 million, and he's going to be done with that piece of the business, or his piece of that that contract at the airport will be done in 8 months. It's going to be over with in 8 to 10 months. He'll have $8 million in his pocket in 10 months. We gave him $1 million. He's going to pay us back easily. So those types of contracts with the federal government, airport, ISDs, and those are the independent school districts, they tend to pay, in the state, they tend to pay a lot faster. And this is a caveat, if you have the contract directly with them. Now, if I'm a subcontractor coming in under another sub, then that sub is going to pay me. And I'm waiting on that sub to get paid. And he's saying that he hadn't gotten paid in 60 to 90 days. So that means me being another sub, I'm not going to get paid for 60 to 90 days. And it snowballs. And as a small company, a small contractor, you go in and you go in and provide, you do the painting or you do the sheetrock. And but this other, you're the sub for a sub who's waiting on the prime contractor to get paid from the airport. And then the prime is going to take anywhere from 30 to 60 days before he pays that sub. And then that sub is going to take another 30 to 60 days to pay the sub. So you start to get into that situation now where if you're tier 1, tier 2, and when you talk about subs, for those who don't know, subcontractors to the prime, it's going to be a tier 1, tier 2, tier 3 type of vendors, right? Right.
When you start looking at that, now you got to look at that alternative space. You got to look at that micro lender, that can provide. And I know it's tough, but that's the only other money you're going to be able to actually get right now that can sustain you for that 30, 60, 90 days. But now you got to pay that money back quick too. You do. But I think even one of the partners, that we brought in recently, they're looking more at the business though, Todd. Not non-traditional way of MCAs where they operate, but they were looking more at the business owners, male or female, right? Or they're looking at just the business itself, right?
Right.
Having some revenue. So,
and I know exactly what you're saying and what you're talking about, and I tried to stay away from that because I know what they do. I know exactly what they do.
But you can't go from a small business maybe wanting 100 to now angel investors and all these other ones who now going to lend you $1 million. I don't need $1 million, right?
Yeah.
I need 100. I need 50. I need 200 for whatever reason. So you just have to make sure. And we talked about this a couple of weeks before.
Yeah.
Before you get that money, make sure that you're getting it for a specific reason. You have a plan for that money, and you have a plan to pay it back.
And there are lenders out there for everybody, and those lenders that you're talking about, those merchant services type lenders, they're very, very, very high interest rate driven type of lenders, but they are specifically used for short-term financing. Correct. And if you don't use it for short-term financing, it will put you out of business. So if you know that, okay, I got this contract, I need $50,000 to kind of get things going, go buy my supplies. I got to go buy all the brushes and all the paint and blah, blah, blah. So I need $50,000. So I'm going to go to one of these merchant services type lenders. They're going to be taking out funds probably weekly, bi-weekly. But I know that I'm going to get my first payout in about 30 to 45 days. And then 45 days, when you get that payout, you should be paying that particular lender off. If you don't pay that lender off at that point in time, that's where they start making their money, because they know that you're going to drag them out. And they're going to be hitting you every week.
And we strongly advocate, man, like Antonio said, I mean, for every business, you got to have a plan. You got to have a plan to pay it off, or some other way to get the money back, to that lender. Because we know that it can hurt you if you just, but that's with the bank. That's what CDFI. That's what anybody. We don't get the money back. Let's just keep it honest. We don't get the money back to you. We still gonna get hurt. You know what I mean?
Yeah,
And
exactly.
when we get
Exactly.
to the
And
private
especially if
equity
you come
side,
at me with this, if you come to me and I do an SBA loan for you, so you're not paying
yeah.
the
Well,
federal government.
let's talk about the SBA loans too, though, Todd. Let's talk about. So
Yeah,
you got the 7A, 8A, 504 disadvantaged hub zones. Let's talk about
yeah. Those are loans that are guaranteed.
it. Yep.
They're not guaranteed for the borrower, and the borrower has to get that understand that it's not a guaranteed loan for the borrower. It's a guaranteed loan for the lender. So the
Yeah, but
lender
you got to
is
break that down. Let's say
so
we don't understand what you're talking about,
the
right?
lender is insured by the federal government up to 70% of that loan. So if that borrower goes bad, the banks, I mean the SBA is saying, okay, bank or CDFI, we're going to pay you 70% of that back because this guy went belly up.
Yeah.
So, but whatever that amount is, that borrower is responsible for it for life. So you never ever get another government loan. You'll never ever you won't ever be able to do anything with the government as long as you owe the government. And if if that loan defaults, if you default on that loan, the banks are going to get paid back. The banks love making SBA loans. CDFIs love making SBA loans because those loans are guaranteed for them. It's an insurance policy for them. It's not an insurance policy for the borrower. The borrower has to still pay those funds back. So, but at the same time, it's a great loan for the borrower because they get longer terms.
There you go. There you go.
They get longer terms, lower monthly payments,
right. Yep.
and a very, very good interest rate because the government says you can only charge this amount on the interest rate. You can't go above this here at this amount. They can only charge this, and we'll give that borrower a longer term so they can have lower payments. They try to make it very, very pleasing for the borrower.
Right, but you're talking about 7-10 years sometimes on the SBA.
Sometimes, yeah, absolutely. Yeah. Absolutely.
So, I mean, we just want to know, let the listening public know that that's a 7-10 year horizon, before you get paid off. So you got time to get it right.
And if you're paying that loan as agreed, you got a 7-year term on that loan. You're in your 4th year. You're getting close to paying this thing off. You need more money. We can refinance and add to that, and it starts a new SBA loan. So it's favorable in some instances when you're paying it back as agreed. Is very favorable for the borrower. So SBA is a great way to borrow, a great way to enhance your business, a great way to grow the business is through SBA funding. But at the same time, when you want those smaller loans, 25,000, 50,000, there are CDFIs out there that will look at you and look at your interest, your credit score, and say, yeah, let's give him 25,000. It looks like this person can pay that back quite easily.
Now, is there a lot of challenges though, Todd, because most business owners today, right, have really struggled on the credit. They've really struggled. I mean, we just see it everywhere we go, and the credit is a big issue in walking in a bank or CDFI.
Yeah, it is, and we tried to definitely tell people don't get overextended. That's why your cash flow has to be very solid, knowing that you're paying back what you have, all the debt you have right now. You have a house note, a car note, a couple of credit cards, and now you want to borrow some money to grow your business. Adding that amount to what you already have, and your business income, is it enough to sustain that new debt? So I don't know how to put it, but you have to keep your credit clean. I was talking to my son the other day, and we were talking about different credit, And he was saying, Dad, it's so crazy out here because he said credit is everything. And he's just now realized he's 27 years old. Dad, credit is everything. Man, credit is everything. I said, yes, it is, son. He said, you don't even have to have a job. If you got good credit, you can get anything. I said, pretty much. So credit is the most important aspect of your life that you could ever have, because it pretty much will allow you to get certain things, get it at a great rate. Even your insurance on your vehicle, on your car, you get a great rate because you have a good credit score. Credit scores are very, very important. And if there's a way for anybody to really, really maintain their credit scores, you can get anything. You can go to the bank, you can go to the CDFI, the credit union. They will get, and I would say a 680 plus. A 680 plus is a pretty good score where you can really kind of get just about anything you need if it's not something, out of the ordinary. But yeah, credit scores are very, very important. Try to keep those credit scores as pristine as you possibly can. Try not to be overextended. And, just pay as agreed every month.
I know we have a lot of, people who have small businesses. They're just kind of getting started. A lot of times they have great ideas. They have, all a great business plan. I'm making candles, and I've sold a few candles, right? And I have some orders. So I don't have a lot of history. I don't have a lot of credit. I don't have a lot of cash flow. What do I do? Like, what is my best option for gaining access to capital at this point? Or is it, I'm gonna have to call my mama and my friends?
I was getting ready to say, call mom and dad.
Call AD.
But that's, and when I do my presentations, a lot of times that's one of the first things that I say. You're either going to fund it yourself, or either you're going to go to a family member, mom, dad, or brother, sister, someone, a rich uncle. Go to them, and then next it's going to be, your be careful with your friends, because they're going to want a piece of the business, and they're going to want to tell you how to run it, and you putting too much barbecue on the ribs, and so. But you got to be careful who you borrow those funds from as well. And when we've been a little bit facetious when I say go to the family and friends, but that's an avenue for access to capital, is those friends and family, because a lot of times when you have a startup business, absolutely no bank out there is going to work with a startup. Not a one.
Yeah. But okay. So now we got to keep it real, Todd. All right. So most of us do not have friends and family that have liquidity that you can go to and get money, because they're struggling too, man. So let's keep it honest, right? So if you don't come in to a place like PN Community or other places, other platforms to get educated, to understand what you got to have, like listening to you, Todd, to understand what you really got to have to get to the bank or get the CDFIs or get MCA loans or whatever type of money you're looking for, it's just not going to happen,
But there are some good opportunities out there for startups, and they are with those CDFIs.
Yeah,
those CDFIs do work with startups, and they will give a startup seed money, to get that business up and going and running. It's going to be a small loan. It's going to be a 5,000 or 10,000, maybe nothing more than 25,000 on startups.
Right.
So you can get your business going. You can get your business started with startup money from a CDFI, and there are CDFIs out there that do work with startups. Yeah.
So that was a question that just came in. How do you recommend people structure loans from family or peers in exchange for equity or interest of the funds invested? So how do you structure that?
Great question.
You
Right.
know what? Like I said earlier, you got to be careful who you borrow those funds from, because they're going to want to be a part of your business. They're going to want to help you run it, or they're going to want to be have a say so on certain things, or they're going to want to walk in your business and grab whatever they want for free because they gave you a loan. So you got to be careful. So, and I always tell people that borrow from family members and friends and what have you, do a promissory note.
I was just
Put
going to say that. There
together
you
a
go.
promissory note. I'm going to pay you back this amount every month for over a 3-year period. And usually when you're working with friends and family, they want to keep it as short as possible because you're not borrowing a lot. So over a 2-3 year period, this loan will be paid off, and I have the opportunity to pay it off early as well, with no penalties and things of that nature. But do a promissory note, because if you don't do a promissory note, they're gonna think they're part owners, and that's not what you want. You don't want them to be a part, unless you do want them to be a part owner. I don't know, but
no, I think the promissory note it's the really best way to go, because it's a legal bonding document, right? At that time, and let's face it, a lot of us businesses, you need help. You definitely need help. You need education, but you got to find people who also believe in your company and what you do and how you do it, right? And sometimes it's a hard sell, because people are like, man, there's no way you could do this, right?
Yeah.
There's no way.
Well, I mean, and I've been in that position. Before. I got a brother. He swears he's the best cook and chef in the world. He wanted a food truck, and he just badgered me about helping him get this food truck. But he got to the point where his health. I wanted to do it, but his health probably wouldn't allow him to. I was afraid that, because he would faint, he would black out, and he's done that at one of his jobs, where he's the master. What do you call these guys who smokes and smokes meat, and he's master smoker, ologist, or whatever
it is.
He works with knives. He works with big knives. He's chopping up ribs. He's chopping up beef, and he fainted. And I'm like, I can't have you driving a food truck and you faint. So as much as I wanted to, it was just, you've had this situation happen to you a couple of times, and that's scary.
Now you touch on a good point though, Todd. That's very interesting, because when you are asking for money, people do have to evaluate: are you healthy? Are you gonna be around? And let's get a little bit deeper. Do you have a succession plan if your ass do drop? Right?
Yeah, exactly. Am I gonna have to drive the
truck? Right. Who's gonna continue to run this business? Yeah. Right? So it's all of those factors, man. That's why we advocate, and we like really preach, like, you got to get educated on a lot of the things that you think but you really don't know. You don't know what you don't know.
Yeah.
But you got to get into a platform, or you got to talk to subject matter experts to understand, like, okay, I really need to get this right. I got to have this, and this in order for me to scale this business. Now, the kids don't want the business, so who's my successor?
Exactly. And you got to have that. You got to have that in place as well, because I'm working with a guy right now that has a very, very successful business, but the kids don't want to do it. They don't want it.
They don't want the business. They want to do their own thing. They want to be their own entrepreneurs.
Yeah, they're doing successful. They've been successful with what they're doing, and they don't want to take over the business that the dad has started. So you run into that as well. But for startups and for small businesses that need funding, really CDFIs is a really good avenue, because they do work with small businesses, and there's a CDFI out there, a couple of them that I know of. You only have to have a 600 credit score. They would do a loan with a 600 credit score. Nobody's going to do a loan with a 600 credit score. But these CDFIs will work with you on a 600 credit score if things are current right now. So, and if you can explain, why do you have this 600 credit score? Back when the COVID era was happening, a lot of businesses kind of fell off. They weren't making the income that they used to make. Their revenue plummeted. The credit scores, kind of suffered as well. But we knew what happened as a lender. We knew that, okay, what happened? Well, COVID. I had a business where people couldn't come in to my business. If you had a gym or something like that, they couldn't come into the gyms anymore. And we had a lot of people that had dance studios, gyms, things of that nature, and they just had to kind of shutter their doors until people were able to come back and start frequenting those places. Some of them survived, and some of them didn't. But tell us what happened. Well, hey, COVID, and I had one of those businesses where you couldn't have large crowds, and I wasn't a necessity type business where you can go to the grocery store because you had to go there and buy necessities. My business wasn't one of those types of businesses, so I had to shutter my doors until this thing blew over, and we were able to open back up. So we had businesses that were in those situations, and we were still able to loan them money because we kind of knew what the situation was. And They suffered, credit scores suffered, revenue suffered, but we knew what happened because we looked at the tax returns before that. The tax returns before that said you were doing very well. Then you had a year or two in there where it just hell in the handbasket because of the pandemic we went through. Now you're building it back up, and it hadn't gotten to where it was in 19 and 20, but it's starting to build back up, and we see the growth. We're able to give those individuals money in those situations, in that situation. So there are opportunities out there.
Todd, today, so what type of services, personally on yourself, could you actually offer the PN community and, the PN Global News viewers? What would you offer? What kind of service could you offer to them? For yourself?
There are services out there. We call it technical assistance.
Okay.
Technical assistance helps small businesses or individuals kind of understand their financials, understand marketing, understand how important credit scores are, and we help you build that credit score back up. We help you build your revenue back up. We help you understand where your funds are going and where they should be going and where they should not be going. So there are technical assistance opportunities out there for businesses to take advantage of. If they came to me, I'll probably charge. But there are.
Listen, everybody's in the game to monetize.
So if you come to me, but there are free services. There are free services. There are free services out there.
I think when people get free, they don't. I don't know if they don't appreciate it or they just like it. It don't seem real.
Right. So if you have to pay for it, you're gonna listen to every word I say.
Pay attention a little bit, right? Even if it's a little money, even if it's $200 a whole year.
Yeah, I mean, and you'll probably pay a lot more attention when you have to pay a certain fee, as opposed to because if you're paying me a fee, you're gonna call me on time, or if you have to come to the office, you're gonna come to the office on time. But if it's free, I don't need to go up there today. I don't feel like talking to him today.
Right.
Hey, I'm not gonna be able to make it. Can I call you next week? Sure, it's your business. Right. I'm trying to help you get to a point where you can go walk into the bank and walk into a CDFI office and borrow money. Okay. It's all on you. It's your time frame.
But that was another question. AD, you want to take it?
The business owner's credit score or the business itself, I think they're asking, once you take or given a loan, does that like affect your business credit? Like who reports to the business bureaus for your business credit?
And people think that, well, I want this loan to be in my business name, which that's great. Put it in the business name. But you know who's going to guarantee that loan?
You.
You as the individual
Yeah.
will always guarantee that loan. So don't ever think that you can go in there and borrow money without being a personal guarantor. You may get to a point in life or a point in your business ownership where we will just look at the business credit and business cash flow because your business has been doing so well for so long. But in the beginning, you're going to have to personally guarantee that loan. So you will be the personal guarantor on that loan. So we will look at your personal credit score along with your business credit score as well. So and businesses don't really necessarily have credit scores. They have credit with merchants. So if you own a restaurant, your credit is with uh, the supplier of the
Right.
equipment. Your credit is with the supplier of the meats and the vegetables, and that's where you have credit. You have credit with those guys. The bank is still looking at. We look at how you pay those guys, but we also look at your personal credit score as well. And you will be held. You will be the personal guarantor on any loan that you do until you get to a certain level where we look at you and say, "Oh, we'll lend to the business any day. You're good. You're paying as agreed. Your business is growing. You've never been late on anything. So yeah, if you want to come in and borrow some money under that business name only, they can do that. They can do that. But you got to get to that level eventually. You won't start out like that. You have to get to that level, and most of the time, it's going to be a personal guarantor.
So for the sake of time, Todd, we got to make a few announcements.
Okay.
Then we got to get your final thoughts. And then we got to let everybody get to bed because some people going to bed early. They got to get up and work in the morning, right?
Hey, come on, man.
Hey, and if anybody want to get in touch with me, reach out to me. Just go to my LinkedIn page. It's Todd Adams, MBA, on LinkedIn. So,
and y'all can connect Todd through PN Community because he's here too anytime. Definitely shout out to some of our sponsors. Footsnap, out of Switzerland, right? AT out of Switzerland.
Come on, Ron.
I know, right? But Footsnap is definitely coming to you very, very, very soon in a way that you guys would never imagine, that you have a digital footprint of your feet for everything. And they might also have a footprint of your whole body soon because it's coming. Everything is digital these days, right? And then another sponsor that we have is Burdock Naturals. It's shaving cream, but it is for men and women. But it is probably the best because I know that I went to the dermatologist for 4 years when I had a black spot on my big old head right here from the head and butt AD. And using that soap, man, I went to dermatologist for 4 years straight until I started using Burdock Naturals, and then my whole dark spot disappeared.
excellent.
So
Excellent.
Burdock Naturals is a great soap to use. I recommend you highly use Burdock Naturals.
I was about to say, Rod, don't be messing with the women who be shaving, bro. You can't. Man, I don't want to be doing that, man. You know what I'm saying? You gotta watch out, bro. Be careful, Rod.
Yeah, be careful out there.
No, but the soap is good for your whole body. So I use it on my entire body. It's not just shaving. It's really the entire body. But it's really it's probably the best I've ever had in my life. Seriously. But Todd, we want to thank you, man, for
I appreciate it, man.
It's always a pleasure, seeing you and you passing knowledge to the investing public and all these businesses worldwide. Is really, I think, half all societies trying to gain access to capital right now. Pretty much.
Yeah, they really are. They really are. Yeah. And what's so crazy right now? The money is out there. It's there. Yeah. Just be ready to go get it. That's it. Have everything in place. Be ready, and you can get fund. There are loans out there that can be done 24, like you said, 24 hours, anywhere from 1 day to 5 days. You can have funds in your account. It's out there. It can happen.
We want to thank definitely AD. We always thank our audience, man. Anybody that's listening, any PN community member, you're thinking about joining PN, join us at www.pncommunity.org. We're also PN Global News and we Playbook Investors Network. But you have to take care of yourself and your business. You have to get educated on the things that you need to take your business to the next level. That's why it's important to see and talk with people like Todd Adams, or AD, or guys and other ladies who had experiences in the business world, from banking, private equity, VC, family offices, micro lenders, the entire gamut. But you got to understand what you need when you walk in the door, and we got to get it right. Nobody is going to give you money just because today. It's just not happening.
You don't know what you don't know. And I just think being around people who have the experience in business, I think that I definitely want to point out the fact that Todd said when he kept saying, be ready, have your financials, make sure you file your taxes, make sure you have that stuff handy, like right now, because that stuff you should be looking at anyways, right? All the time, Todd. And then when something comes up, you're ready to go. But again, joining PN Community is going to be the place where you're around people who have done it before, who can get you thinking about things you don't know. Because again, you don't know what you don't know. But having those conversations and being in the room with people who've had those conversations before is a place where you need to get started.
Excellent.
So we want to continue everyone to have success. But remember, PN Global News is every Wednesday at 8 p.m. Central Time, 9 p.m. Eastern Time. And for the big fella on the West Coast,
the West, baby.
6 p.m. Pacific Time. Hey, listen, everybody, have a good night. Have a great rest of your week. Continue to grow and scale your business. But please, join us anytime at PN Global News and pncommunity.org. Have a great night. All right, Todd. Thank you, brother.
Appreciate it, man.
Take care, man.
All right.
All right. Now.
How do I get out?